You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
Welcome back to the Option Block, everyone's favorite. I know it's my favorite. Hopefully it is your favorite bi-weekly source for all things options related, a little bit of options wit, a little bit of options wisdom, and some education, some analysis, some unusual activity, and a whole bunch of hilarity sprinkled on top. At least we hope so. And you have the delicious hot cocoa that is the Option Block. My name is Mark Longo, and if I still sound a little bit different than usual, it's because I have escaped the polar vortex that is lurking over Chicago and the Options Insider studios right now. In fact, I was reading this morning, as we are here in the southern studios, the southern satellite studios, that Chicago is colder than Mars right now. So not the place you want to be in terms of temperature right now. I think only a couple places on the planet that are colder, that actually have population. I think one place in Siberia, and then a place somewhere in the hinterlands of Antarctica, which doesn't really count because no one lives there except for the penguins. So effectively, not many populated places on the planet colder than Chicago, which is a good time to get the heck out of Dodge. Freezing temperatures and recording equipment tend to go hand in hand. I've found out. And of course, where can you find all of our great goodness? Well, if you're listening to this show right now, maybe listening via the main Option Block feed. You subscribed in iTunes. Well, we love that, of course. If you are a subscriber in iTunes or wherever you get our show from, if you're interested, if you like it, leave us a review in there. We like to see that kind of stuff. We float in there from time to time, see what you guys are thinking. It's not our first choice. Usually people hit us up a legion of other places first with some more immediate questions. But if you have some thoughts on the show, leave them there. We'd be happy to entertain them there as well. And if you're getting them individual show feed, make sure you check out our network feed. It's available pretty much wherever you find your favorite podcast programs, including via Pocket Cast these days. So check it out over there as well. You can always grab us via the old mobile app. That has everything we've ever done in there. So prepare to go on an audio adventure when you download that app, because we got you covered with all the options audio you could possibly handle. And however you hit us up, and again, I'm sorry we're not doing the live stream. The polar vortex and beaming in from the southern studio makes it a little hard to do the live stream. We'll get back to it next week, don't worry. But in the meantime, you guys can always enjoy us after the fact. And however you listen, make sure you hit us up with your questions, your comments, your insights. We love to hear from you guys. And joining me on the old program today, let's go in order of proximity to the polar vortex. So right next to it, thank goodness they have that weather shield in place, because it is indeed paradise on earth. St. Charles, Illinois. We are joined by Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, how is the weather shield holding up in light of the intensity of the polar vortex that lurks right above your head?
Oh, we don't have a weather shield. We like cold weather here in St. Charles. Maybe not quite this cold, but life is good. I went to the Bears-Packers game yesterday.
You did? Wow, it was so cold.
I did.
Helmets were breaking. You know that.
Yeah, it was the fifth coldest game in Soldier Field history. My son and I were hoping that we could get to the coldest one, but all of a sudden the kickoff temperature got a lot warmer, and we couldn't be a part of history. So, but I was that guy that had his shirt off on TV. Not really.
I was just talking with someone this morning. I was like, what kind of crazies would actually go to that game? And now I know. Now I know two of them. So I'm happy to say I I know two people who went to that game. But you know it's impressively cold when it wasn't like a team from Tampa Bay whose helmets were breaking. It was the Green Bay who's known some cold in their days. They came to Chicago and their helmets were breaking. It was so freaking cold. They were snapping from. They were, I guess, not rated for that degree of wind chill there on the lake. So impressive stuff, Uncle Mike. I'm impressed that you would sit through a 2-10 Bears game in such weather. That's a true commitment to the cause, sir.
Well, the Bills and whoever plays the Bears, and so what better way to take my son to something? My son always wanted to go to a Bears-Packer game, and so he got these tickets as a birthday present a few months ago, back when everyone had optimism and the Bears were going to be good. And now all of a sudden it's 2-10. I'm taking him to a game and 0-degree weather right off the Lake Michigan, and can't say I was super excited for it, but I have to admit when I was there, it was actually a very exciting and fun game to watch.
Well, that's good. Hopefully you got a good deal on it, considering it's 20 below zero and the team is 2-10. Hopefully maybe they paid you to come.
There you go.
Please show up and root on our team. Watch our helmets crack in real time. That's impressive stuff. You do indeed get the award for the most diligent fan. And a little bit farther from home, we are joined also by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, how are things in the Duchy of Maine, and has the polar vortex reached you yet?
It is a cold. It's the water is basically melting, or not melting, freezing as our ice rink starts to build layers of water. So I'm very happy because it's just that time of year. Although what's amazing is our road could be an ice rink right now because the weather temperature got to the 40s last night, the low 40s, so everything melted. And then it went promptly to 5 degrees and froze everything like a giant. So there are sheets of ice everywhere. You can't escape.
There you go. As a man who is a proprietor of ice rinks, I'd imagine that would make you fairly happy.
I am just I've been a user of other people's ice rinks, and now I'm actually going to try to go it alone, see if I can do it. So there's progress. There's progress.
Well, there you go. All right. And speaking of progress, let's make some progress with the show and dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was lighting it up in today's market activity. I think the polar vortex crept on over into the S&P today as well, because we didn't have a net big move. We had a somewhat of a range, about a 9-handle range intraday, so it wasn't like nothing at all happened. But compared to some other recent days of late, this is certainly not perhaps the bellwether for activity what we may have been looking for. The S&P closing essentially unched on the day, fractionally up. The Dow up fractionally as well. The Q's up almost half a percentage point, so a little bit of upside love there. But that's pretty much the shining point in terms of activity on the old day. And, of course, with all of this little bit, I should say, of upside on the screen, VIX cash exhaling, taking a little break. They're saying, you know what, half the country's frozen. We're just going to take a break here in VIX land as well. Vol is frozen as well, off about half a handle or close to it. Back below the magical, mystical 12 handle, right about 11 3/4 right now. So people who are fading vol on the last vol view is looking all right. We'll see. Of course, we know, as we have learned many times, painfully indeed, on that program, how the week starts. It has nothing to do with how the week ends from a volatility perspective. Sometimes how that show starts has nothing to do with how the show ends from a volatility perspective. So we can't count our chickens yet there. Got a whole week to go before we get that stuff. And Mr. Rock Lobster here, he's giving me a hard time around the scenes, listeners. He wants live music in the show. We're doing it live to tape, so he's not getting the live music. Only you guys are getting that privilege. So he's got a little bit of umbrage. So instead of letting him stew in his umbrage, let's toss to him to see if he can get his umbrage out. Sir, what caught your eye in what caught your umbrage perhaps in today's market activity?
I think, but I'm not sure. But I'm pretty sure, but I'm not sure. But I may be sure that we had the lowest close for VIX for 2016 today. I'm checking to make sure, but I think that is the truth.
I know we've printed lower, but yeah, closing is a different question. I'm gonna have to.
Yes, I'm pretty sure I'm doing a little check. We did close 11:31.
Oh no, I'm looking here.
I think.
Yeah.
11:31 was the low close. So we're getting there.
About half a handle away.
Yeah, we're about there. Where VIX is a little bouncy. Let's just say it's been bouncing off the 11 handle, which is normally what it does, because since it has a hard time going below 10, it is setting up though for a sub 12 close, which would be good for some of our positions this cycle, without a doubt. You got the Russian ambassador to Turkey shot. That sad. In a mad world that we still live in. VIX did nothing. You had some Trump electors. I still don't know how that all went down, but at least today, I guess that all went like it's supposed to go, how it's happened for the last 200 and something years. Even though there was, what are those? Those Hamilton electors.
The faithless electors.
And, you got the random gunmen still running around. The IMF's found guilty of negligence but gets no penalty. That's the IMF's. So the last IMF person, what was that? Strauss-Kahn or whatever his name is. He got caught, the kind of his hand in the hooker cookie jar, and he got booted. And then the next IMF director, also French, seems to be not quite looking the right, or she just looked the wrong way at an inopportune time when she was, I guess, Ministry of Finance in France. So I guess it's all, the IMF is still that bastion for telling people what to do. But anyway, all of these little things added up to volatility just going down. So it's one of those things where you've got the market is still kind of going up. I think the banks took they rallied toward the end of the day. Amazing. So I thought that at least there'd be a one day for a little pullback. It was for a while. But so banks really are not going down. Oil's kind of hanging out. Technology rallied a little. It's just one of those boring days as far as so. From a premium point of view, if you're long a lot of it, probably not a good day. If you're short some vol products, you're happy. And the only thing else I would say is it looks like the treasuries have kind of stopped going down in the short term. But other than that, it's since I have ice in my ice rink, it's hard for me to have any umbrage at all. So I'm going to toss it to Tucson to see if he can to grind some up over there.
The IMF. Yeah, you're right. They're kind of starting to rival the IOC, the International Olympic Committee, in terms of just sheer outright slander, or I should say scandal, and debauchery, and just outright shameful activity. So maybe I think if you just append international to in front of any group, any acronym, it suddenly becomes shady. I think that's what it is.
I was just about to say, because you got the soccer, right? FIFA. Then you've got the U.S. Olympic Committee. I think then you have. Don't you have Formula One is international motor car racing? It's like, just take your pick.
We should just call this show the International Option Block, and we can just rape and pillage till our hearts are content.
And just fill our pockets up and leave.
Yes, exactly.
And then the best part is, then you point fingers at everybody else for their I don't know, their negligence, their this, their that, whatever they decide, because I guess they have to do the old bait and switch.
Yeah, we can start coming on here talking up some pump and dumps. It'll be good business. I like it. I like this idea. The International Option Block, the after hours version. We'll get a little shady. I like that.
This would be the blue version.
Yes, the blue version. Don't let the kids listen. Before we go too far down that rabbit hole, Uncle Mike, save us, sir. What caught your eye in today's activity? Hopefully nothing international related, because we all know that's just
right. International options after dark. There you go. This is the time of year where, unless something really bad happens, not much is probably going to happen during the market phases. I highly doubt that even if they had the cure for cancer right now, they'd never announce it these last 2 weeks of the year, just because nothing seems to be happening. So from both of your experience, you'd probably agree, because between the two of you, you both have probably about 6,000 years of market experience, with about maybe 5,990 of them being Andrews, but nonetheless, well, probably not quite that many. But anyway, with that, I doubt that you can ever recall a time to where it's the last 2 weeks of the year and it just becomes a crazy time and that there's a lot of volatility in the marketplace. But with that being said, there are things that you can do these last couple weeks, maybe. What I typically look for these last couple of weeks, I typically am very inactive. And just because during this time, it's hard to buy premium, because I think that it's going to be very common that we're just going to go a couple points a day in the S&P, a few points a day here and there. But I have a hard time doing it just because of the fact that you're probably not going to get much movement, whether you're bullish or bearish. I don't see a big drop coming unless something really bad happens, to where we have some type of big news out of something international, for that matter. So overall, the thing that I would do during this time, if the opportunity presents itself, if we have a little bit of a dip in the S&P towards the end of the day, I may consider selling a put spread overnight, possibly. It just kind of depends on what it looks like. But even doing that, the premium's not going to be a lot anyway. So in all honesty, there's really not a lot to do typically during this time of the year. And that's why I think it's good that we have our year in review show, and we have a lot to talk about along those lines. But in terms of the everyday market activity, there's really not a lot of it. The one thing that I did see today, we did have GLD have a little bit of a move, about 50 cents, which is really not that much by any means. But aside from that, it is very minimal activity. And if we get a dip during the week, maybe sell some puts. But aside from that, there's really not going to be a lot going on.
Maybe sell some puts, says Uncle Mike. Other than that, not a heck of a lot. I will give you something to do, Uncle Mike, if you are hurting for things to do. Because I know you guys were talking last week on the show. I know this one really was near and dear to your heart as well. Our question of the week last week was regarding what people expect from their financial advisors. I know you took a lot of umbrage to some of the responses. I'll hit the final results, what the week ended on, in a little bit when we get to the mail block. But I was curious, Uncle Mike, since you had such an interesting take on that, and because we are here in the Southern studio, so we haven't had a chance to post our question for the week ahead of this week's show like we normally do. I'll give you some time to mull during the odd block here, and maybe you'll come up with an interesting maybe corollary to that question, something along those lines, something that gives people, 3 to 4 choices, hopefully in 140 characters or less, so we can squeeze it into Twitter, and then we'll see maybe we can follow that up in some interesting way. So you've got some homework, sir, while the Rock Lobster and I don our fedoras and prepare to head only where fools like us end up going, the rest fear to tread, because it's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, that music means it's time for the odd block, the portion of the show where Andrew and I, sometimes Uncle Mike, if he's feeling frisky, if he's feeling his oats, head on over to the dark side of the options market, where we proceed to investigate some weird, unusual, sometimes downright head-scratching paper. I hope the Viceroy isn't tuning into this one, because I think this first one is going to be deeply offensive to him. So if you are listening, Mr. Viceroy, by all means, tune out, sir, because you're not going to like this one. First up, we've got GSAT. This is GlobalStar Inc. Ticker symbol GSAT, GSAT. Closing today at a whopping $1.35, up 30 cents, or over 25% on the day. So if you know some of those older episodes where the Viceroy joined us, he took a lot of umbrage to any name south of $10. Certainly certainly south of $5. So we get into the $1 range, and he's going to look askance, and perhaps rightfully so, at any options trading on this name, because the stock in and of itself is a de facto option at this point. Even still, despite the fact that it is so cheap, this thing only averages 1,500 contracts a day. Today, doing a little bit more than that, as you might expect, given such a pop in the name, nearly 30%. We saw 35,547 contracts, lighting it up today in good old GSAT, about 5-to-1 calls over puts. And that should be some inkling, some idea of what caught our eye out here. And in case you can't see it for yourself, just scroll on down to that first month there, the Jans, where you shall see, surprise, surprise, the Jan 1/2. Yes, $1.50, not 150 or anything else along those lines. $1.50 calls. Lighten it up today to the tune of, when we first started noticing these, a block of about 2,000 going up, paper gobbling up those bad boys for 25 cents. As the day, that went up, on one block over there on the ISE. We saw many, many more follow to the tune of, by the time the day ended, about 14,500 of these Jan 1/2s lighting it up. They went out 20 cents at 30, so even with that rally, they had that call spread. That call trade was pretty much mid-market on the spread there. So he didn't get perhaps the pop he was looking for on the call side. Still waiting a little bit on that, but he needs about another 15 cents for these puppies to be in the money. And if today's activity continues, that's not going to take too long to get. Of course, it wasn't just the 1/2s. No, it was the 2s lighting it up today to the tune of about 1,600 contracts. The very optimistic 2/2s with about 5,400 contracts. And if that wasn't optimistic enough for you, also the 3s with 5,000 contracts, although the similarity on the volume, I'll have to dig into that. Looks like it might have been a 2/2, 3 vertical, in which case, not perhaps as optimistic as it seems, but still fairly optimistic given the fact that we got essentially 1 month for these puppies to go. And looking back on the year that was for good old GSAT, if you have been following this name, you probably have a sad frowny face on your face post-April when this thing got cut from about $2.80 all the way down to sub $1. I think it got as low as, about 97 cents there. So, and it's kind of been vacillating around in this sub $1 range ever since until today, when all of a sudden getting some love to the upside. So, Mr. Rock Lobster, take it away here as I discuss behind the scenes with Uncle Mike his question of the week. What's your take on, first off, if we haven't talked about it in a while, what is your take on options on such incredibly cheap names in general? Are you leaning more Viceroy? Are you leaning more towards they have utility? What's your take on that? And then B, what's your take on this? Our friend here piling in on some pretty near-term juice here in GSAT.
I'm leaning on a little more Viceroy just because you just buy them. There's no expiration. I don't see what the I guess people want to pay. There's always the thrill of paying a quarter for something and selling it for $1. But for $1.50, I think you just buy it. And then way you don't have any expiration cycle. But that is a way. It is a way to do it. But the GSAT, it just looks, you had a 30% jump in the stock. There's probably a lot of short interest. We've seen a few of these squeeze plays around, so it would not surprise me to see it squeeze further. And there's a lot of these little stocks that were dead, and in a market that's, at all-time highs, that's looking for some new action. A lot of these little dead companies that are still kicking around, things like this happen, and off they go.
Off they go indeed, sir. And off we go, continuing on to our second name, our second victim, the old WBA, no, not Women's Basketball Association, but instead the Walgreens Boots Alliance. That's one we talk about a lot here on the old program. Almost daily we check in with the Walgreens Boots Alliance because who doesn't want to see how that alliance is shaping up. Closing today, ticker symbol, of course, WBA, unched on the day, $86 and a handful of cents out here. So it wasn't the underlying that caught our eye today. This name does about 12,000 contracts a day, doing 36,000 today, so pretty much 3x that, nearly 9-to-1. Calls over puts, so a lot of funky action catching our eye on the call wing here today. In particular, listeners, it was funktacular, if I can get my scroll to work. There we go. Vertical. That caught our eye. In particular, the 1 point ratio vertical out here, listeners. It was the D8788, so 1 point going up 7,500 by 15,000 times. Looks like paper buying the 87s, selling the 88s. So doing one of our old favorite ratio 1x2s, buying 1, selling 2. Open interest on both strikes, pretty much nominal, 7,500 by 15,000. Also worth mentioning, these are the weeklies, listeners. So these things go out essentially this week. So this guy is really loading up, really swinging for the fences on a very, very near-term pop. He needs at least a handle in the underlying for this thing to start doing all right. He needs it to happen pretty quickly. Again, a weekly 1x2 is something that's going to decay, even with the 2. That helps, but it's still going to decay in your face. We'll see. What did he do this net for? He did it for a whopping nickel, or excuse me, 2 cents. So he's not going to hurt as much as I initially assumed with only a 2-cent outlay. So get a nice little free crack at the bat there, actually, this week over here in the old Walgreens Boots Alliance. Looking back at the year that was in the old Alliance, this thing has flirted with some lower levels, including like a lot of names back in that Jan-Feb timeframe earlier this year when it flirted down with about, looks like the low 70s is kind of the low of where this thing reached, and it kind of has vacillated north ever since, hitting a high recently of about 88 over the past year and then bouncing off of that again. So our friend here looking for those upside highs to continue, looking for it to happen pretty soon. Mr. Rock Lobster, you probably take a pretty fair view on this one because he is following your mantra. He's not getting his juice exactly for free, but he's getting his juice for a very low cost, shall we say.
2 cents is pretty cheap. I mean, you can't even go to the Family Dollar store and buy something for 2 cents.
I don't know. Tusaw, he can figure his way out for 2 cents at the Family Dollar.
He might be able to. He might be a little more skilled and in sort of, blocking and tackling the aisles, so to speak.
There are none can match his dollar store savvy, that's for sure.
However, in the options market, you can buy some upside, some limited upside for 2 cents, which is what I think that, this is Walgreens. This is a stock I love, although it's getting kind of expensive now, so I don't love it as much, but I loved it a lot in the 30s. But at this point, it's kind of one of those stocks that doesn't move a lot, but it looks like it's a little bit of a bet on, the Santa Claus rally into the end of the year. So it looks like one of those plays, like nobody's taking over Walgreens because it's a $100 billion market cap, so that ain't happening. So like ratio trades like this kind of work okay, where you're just looking for, 1%, 2% move, and it puts it in the sweet spot, and oh yeah, and then you have a trade. So 2 cents is about the right amount to spend on it, I have to say. I don't know how much more you'd want to spend than that, but I still like it for even or a credit. But so be it.
Title of the book is not "Get Your Juice for 2 cents." It's "Get Your Juice for free."
Get your juice for free.
2 cents is getting close to that Rock Lobster range, but not quite there. Do try a little harder next time, customer, and then you too can get your juice for free. Getting your juice for 2 cents, I'm not going to knock you. It's not bad. You tried hard. You tried your hardest. You did your college try. So at the end of the day, if you're gonna load up on something with a week to go, I've certainly seen worse ways than here in this name here. Of course, obviously, if it pops hard, he may have some questions about that, but he's got a little bit of room to run on the upside. So I don't think he's too worried about that as we move on into our final name / victim here. This is, I don't believe we've touched on this one, at least not for quite some time on the Odd Block. This is the Energy Transfer Equity LP, ticker symbol ETE. Closing today just a tick under $18, $17.96 to be exact, up about 1% on the day. If you're not familiar with this name, they directly and indirectly own equity interests in Energy Transfer Partners LP and Sun LP. So they're engaged in diversified energy-related services. They also own and operate 71,000 miles of nat gas pipelines and other things. So interesting stuff here. It's a name that does about 21,000 contracts a day, doing about 2x that today, doing a little bit over 40,000 today. Again, 40 to 1 or almost calls over puts. That'll give you some inkling of what we saw going up today. And if you want to find it for yourselves, listeners, just scroll on down to Jan. Get away from all those Dees weeklies. We don't want to talk about those. And all the way out to the Jan 20 strike, where we shall find, easy for me to do again, the scroll in here in the Southern Studios is making it a little bit difficult for me. There we go. That's better. All right. Now, the Jan 20s, that's where the action was today. We started seeing them going up, actually fairly sizable in that first chunk. One block of 28,678 going up for 20 cents over on the ISC. Looks like paper selling, but Mr. Rock Lobster has been watching these. Maybe he has a little bit more insight into that. We saw some other blocks going up after the fact. Total volume, nothing similar to that first block, though. Smaller blocks after that. Total of about 33, nearly 34,000 contracts going up. If there was indeed paper selling, they may be regretting that early kind because they went out 25 cents at 30. Again, one of the reasons we think maybe paper selling is because there's a ton of open interest on the strike to the tune of 66,000. So 33,000 going up today, 66,000 open on the strike. So if this is indeed closing paper, he's got a few more to go here, in which case perhaps he's not all that sad about this increase on this name. But interesting stuff. Going back here, looking at the year that's been here for ETE, this thing, like a lot of names in the energy space, hit much lower levels back in that Jan-Feb time frame, getting as low as $4. So this thing has rallied substantially, to put it mildly, this year, up 400% from those Jan-Feb lows. And our friend here, perhaps smiling all the way to the bank on some of these calls and deciding a nickel here or there at the end of the day isn't gonna wipe out what he's already made on these bad boys. Mr. Rock Lobster, what's your thoughts? Do you concur that this is indeed closing sales? Do you think something else is perhaps up his sleeve?
I think they're yielding. They're yielding. They're yielding, and they want more yield. They're in Yieldville. Because I know since this is the holiday Christmas season, depending on which, what your religious flavor is I think somebody wants yield and they want it for Jan, and they're looking at the 1%. And they're saying it's pretty sweet. So I mean that's where we are. We're back to selling calls for a quarter or less.
So you think he's piling on? You think he's piling on to those 66,000? So he's going to have a total of about 100,000 on that strike when all said and done.
I'm thinking that just because you look at it and how much really could he have made buying the things. I don't see the buying them for what a penny. Somebody's going to sell those for a penny, and then he's going and he makes
a cabinet. He went really cheap.
It feels like the continual, kind of the continual yield thing where just a lot of that type of action around. And if they're buying them, if they're paying that, maybe they're just getting out because they had a bit of a rally and they can get out. I mean, it closes possible for small dollars, but I see some, but not huge blocks had traded for 20 cents not very long ago. So maybe and that was in October. So maybe the great oil rally has ended. But that's also the classic thing where, if you're paying 20 cents for something, stock's trading 16. Now it's trading 18, and they're about the same place with the stock $2. It's just, it's hard to buy out of the money calls in a MLP type stock, unless, we were kind of back to the beginning of the year when things were real wacky. But I don't see this as a close. When I looked at the volume, there wasn't enough. I just didn't see any of that, cheapy buys to really make that, that type of trade. So that's what we'll say on this one. I think they're just at this point just writing the Fijis out of that and just see what happens.
Yeah, I certainly can't fault them. Even I was looking at that paper, I was kind of thinking, where do they put these on to be taking them off for 20 cents? But we've seen weirder things.
Yes.
We have seen weirder things. It is called the odd block after all. But since it's Monday, even though we're beaming in from the Southern studios, even though we're not streaming live, doesn't mean we can't take a question or two. So without further ado, let's keep on rolling right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the name implies, this is the portion of the show where you guys hit us up. Usually you can hit us up via the live stream. We'll get back to that next week. Don't you worry. So all you guys who are saying, hey, I can't get my live question answered, you got to hit us up the old-fashioned way this week. So via email, questions@theoptionsinsider.com. Via social media, we're still watching those, so add options on Stock Twits and on Twitter, or the Options Insider. For the handful of you who like to ask questions to us on Facebook, for whatever reason, the questions don't come in fast and furious via Facebook. They come in from everywhere, every other platform. Facebook, I guess, is more for sharing pictures of your kids. So that's what people do over there, not so much asking questions about finance and options. And, of course, you can hit us up via the mobile app if you have it there as well. So it all roads lead to this program and, indeed, to the network at the end of the day. First off, let's pay off that question from last week, that very contentious question from last week. We asked you guys, financial advisors represent the last #options frontier. So what level of options knowledge did you expect from your advisor? We kind of talked about this last week. It was already off to the races this time last week. It only posted it for an hour, and already it was a war between I'll do it myself and the level 3 option specialist. And that's kind of how it broke down at the end of the day. It expired yesterday. And total about 42% Uncle Mike choosing none. I'll do it myself. 27% choosing level 3 option specialist. And the other two kind of split to level 1 buy puts by call, 17%, level 2 income and volatility, 14%. So how does that fit with your worldview, Uncle Mike? Are you pleased with those results? And then B, giving you some time to mull it over, what are you thinking for your alternative options question of the week for this week, perhaps a corollary to last week's?
Well, yeah, I do feel a lot better about that. I understand a lot of people that do trade options. If you're going to take the time to learn about options, chances are you're a very controlling person with your financial future a lot of times. So I would say probably 90% of all of my clients have an account through me, and then they also have their trading account that they'll use on their own. So I totally understand that. I totally get that. So I feel very good about that. I feel good that the demand for good option knowledge is in there. And the fact that, hey, I'll do it myself, I can respect that as well. So I feel very good. All is right with the world with that question, and I definitely feel better.
And what is your surrogate alternative, sir?
Well, what I'd like to do for this week then would be, what do you look for in a financial advisor? And it's kind of a little bit of an extension onto last week's question. So if you, in terms of like what level of option knowledge you would want to have in an advisor, then I would say something along the lines for what you value in an advisor. The 4 choices that I had come up with were option experience, past performance, tax planning ability, or number 4, D, I respect Uncle Mike, but I'll just do it myself. Thank you.
I see. Inserting a little Uncle Mike branding there into our Options Insider question of the week. I'll see how the editorial team feels about you taking it over, sir. But we shall see. Thank you for your suggestions, sir. They will be duly noted and duly considered in the very contentious battle for our question of the week. Speaking of questions, we'll get to some of yours here. We got a bunch here. Let's move on to let's do some quick ones here. We got so many we can get to. Some of them sitting here for a while. We haven't had a chance to get to all of them. Let's go to this quick one here from, I don't even know how to pronounce that, Rorat PD81. He says, thanks. I'm a new trader. How should I interpret this chart, particularly, say, for BAC? He's referring to, we post most actives every day on the website, listeners. So if you haven't been to theoptionsinsider.com, we do this multiple times throughout the day, midday, end of day. We kind of just post exactly as the name implies. What are the most actives for that day by call, by put, by strike, by open interest, etc. He gave us a chart. I don't remember what day this was. I think this is from last week. And so effectively, if you've seen our most active listeners, and we'll include the chart in the show notes so you can follow along. But we listen here. It says number 1 was GoPro that day with the puts doing 66,000 contracts of the Jan 6 puts. Followed by the November, so this was a couple weeks ago, the November 20 half calls and the December 21 calls in Bank of America, one doing 33,000, one doing 31,000. So that's pretty much all this chart is telling you here, Mr. Rorat, and it gives you also the spot price or where the stock was when those traded, the change in the stock for that day, as well as the open interest on that strike. So if there's 12,000 contracts open in the Bank of America November calls and 27,000 in the Dece calls. That's it. That's all this chart is telling you. It's just telling you exactly as the name implies what are, I should say, the most actives for that day. We break them down by calls and puts, do a little bit of that extra work for you. But other than that, it's not. It's exactly as the name implies. So if you guys are confused by those charts, maybe check out our Options Bootcamp program. That's a good one to start with. Kind of explains a lot of basics from the world of options. All right, what else we got here? Let's go to this one from Hitman. He wants to know, is the crash priced in yet? And he also wants to know about black swan events. Are there any options indicators showing one of these maybe on the horizon? Well, that's kind of the trouble with black swans, is they're kind of the unknown unknowns. You don't really know they're out there until they happen. Like maybe today, let's say the shooting of that Russian ambassador in Turkey, that could have triggered some sort of cataclysmic event, in which case that would have been a black swan that no one had foreseen. Or perhaps the grabbing of our drone last week, if that had triggered some sort of international escalation, something along those lines. You know, if you want to look at places, obviously things like the VIX, at the money implied volatility of the S&P is a good starting point. Get into the futures though more, because the futures are actually telling you what the market is predicting going forward rather than the cash VIX. And also skew. We talked about skew many times on this program, as well as volatility views and others. Look at things like the CBOE skew index and a bunch of other names, or you can just do it yourself. Roll your own with the 20 delta risk reversal, or 25 delta, so aka 25 delta put, 25 delta call, aka 50 delta risk reversal, and compare the levels of implied volatility in the call and the put, and you too can build your own skew indicator. So I think we might have that one coming in on vol views too. So I'm just going to give that one really quickly, Mr. Rocklash. I think you've already weighed in on this one. Let's go up and see if we can squeeze in a few more here on the mail block. Kind of doing a fast and furious mail block, trying to catch up on all of the back questions we got. Here we go. Martin Stan. He's got a good one. I like to trade the 2X levered SSO ETF. What are your thoughts on this? And is it a viable candidate for call writing and put writing? So let's pull up good old SSO. If you're not familiar with this one, listeners, this is the ProShares Ultra S&P 500. It is indeed, as he mentions, a levered ETF. It's just a straight up 2X levered. So 2X to the upside, 2X to the downside. Whatever you get in the S&P, you get double in the SSO. At least that's how it's supposed to work. They say similar, they don't guarantee exact. So, so bear that in mind when you're looking at this one. You know, we've talked about some of the levered ETFs. We talked about some of the levered ETFs in the past here on the old program, and I think it's fair to say, Mr. Rock Lobster, they're not some of our favorites here on the program. I've often referred to them as the poor man's options. And let's just do a little quick assessment here, shall we, of SSO. Liquidity-wise, this thing does about average volume, about a little over 3 million shares, not contracts, 3 million shares a day of the actual underlying ETF. Now let's compare that to, let's say, one of our standard bearers, like SPY. SPY's ADV on the underlying 92 million shares a day. So a little bit different from a liquidity perspective. So I'm thinking that's going to be reflected in the options as well. SPY averaging, from an options perspective, 2.7 million contracts a day right now. SSO, 3,100 contracts a day. So I don't know. Mr. Rock Lobster, I'm going to go out on a limb and say, I haven't even pulled up the options chain for this guy yet, but I'm going to go out on a limb and say that you might be better off maybe replicating some of this yourself using a more liquid product like SPY, and then writing options and things that aren't. I'm looking here right now at SSO. These at-the-money options are 50 cents wide, a buck at $1.50 for an at-the-money call. I don't think that's a favorable environment for call writing. What about you?
Well, let's just think of it. If you just, instead of buying one SSO at-the-money call, if you bought 2 calls in SPY, wouldn't that do the same thing?
One would presume, given if they're delivering what they say they are in SSO, one would presume that would pretty much do something similar.
Except the problem with SSO is you have to give away about 30 cents to the midpoint to get the trade done, and SPY only have to give away 2 cents. So it actually probably costs you more to trade SSO, although you have to put more money up for the SPY because you want to mimic the leverage, but the entry and exit cost is kind of expensive. So there are ways to use the lever products that I think are pretty clever. I think buy writing them maybe not a bad idea, but it's more of kind of it's a trade. I don't really think of it as sort of an investment, like where you're sort of holding it for a long term. The 2-time things they kind of mimic, but there's some internal leverage issues which don't give you all the performance. There's just no way to do it. But I think they're good for like a day or two type stuff. But again, if you're just trading, if it's a synthetic type I mean, obviously, if you bought this thing this year, it's up a lot of money because the market's done really well. I just looked at the low of the U is 40 something bucks, and it's trading 77. So it goes up when the market goes up. It works. Buy writing them and stuff like that. I mean, I think if the premium gets rich enough, where it might be interesting to do, but again, shorter term. I still think of them as kind of short term things, and it's hard for me to unlearn that opinion.
Yeah, I mean, obviously there's a lot of options involved in delivering that sort of 2x levered return, and we all know if you're just sitting there, the market's kind of vacillating, and you're sitting on all these long premium positions, which we know they are, because they have to replicate a 2x return. That's a challenging thing for anyone to do without being just crushed by decay on a regular basis. I can't imagine if I had to do that. That would maybe. I take my hat off to these guys. It's a difficult job if they can do it and make it effective without just destroying their returns in the process. But that said, they are poor man's options for a reason. You can do this better yourself. Maybe it takes a little bit more capital to commit, obviously, doing it in SPY than you would just buying the straight up by SSO. So maybe that's where your breaking point is. You don't want to double the amount of capital in your account or allocate less to a particular trade. But that said, I think you're better off using a SPY, writing puts in SPY to get into SPY, maybe writing calls to get out, and doing it on a levered basis yourself in a much more liquid thing. Because you're, like we just said, just straight up example, you're saving, it's a couple cents wide for an at-the-money call in SPY. It's 50 cents wide in SSO. I mean, that's a no-brainer. Do the math. It's not going to, a couple of writes there, and you're going to give up a lot of what you made on the underline. All right, let's see. Uncle Mike, unfortunately, listeners had to hop off. He's the polar vortex for all the weather shield he talks about in the Paradise on Earth. The polar vortex has struck in St. Charles. He has to go deal with some polar vortex related issues. So we'll wrap up on his behalf. Let's do. We got time for one more, Mr. Rock Lobster. This one, hey, you're mentioned in this one, so we got to do this one. This one comes from Aldo 2. I don't know. I guess Aldo 1 was taken. He says, "Hey, Mark, Lobster and UM." I'm guessing that's Uncle Mike, so he gets abbreviated. Just wanted to get your thoughts on Vanguard as an options broker. I know most people use them for mutual funds, but I have most of my assets there. Is it a viable platform for the type of trading you guys advocate? Hope you're surviving the big chill in Chicago. Well, I am, because I'm in the southern studios. Mr. Rock Lobster is, because he's in the frozen hinterlands of Maine. So maybe if he's surviving that chill is a different story. Uncle Mike is a question mark, because he kind of just got sucked away by the polar vortex. So we'll see what happens with him. Keep your fingers crossed for Thursday's show, listeners. But Vanguard, interesting question. We get asked about a lot of brokers all the time, as I'm sure you do as well, Mr. Rock Lobster. Usually it's kind of it filters down to a handful that are very option-centric. You know, your Options Expresses, your Options Houses, your IBs, your Thinkorswims, Trade Kings, a handful of others that are very option-centric. I can't remember the last time anyone asked us anything about Vanguard. Maybe that's a sign in and of itself. But from what I know, I don't use them personally. We don't have accounts with them. We have accounts with a lot of other brokers to maintain and keep an eye on how their platforms and how they trade and their execution. We don't have one with Vanguard, so I'm kind of going more by hearsay and what I've heard on this. And I do know that they're not very options friendly in the sense that they don't make it easy to sign up for these accounts. I know in a lot of other brokers these days, they've streamlined that process. It's all online and virtual. Pretty much here, you just sign up this form. Now you have a futures account. Sign out, fill out this thing. Okay, now you have an options account. They've also streamlined the interface, so it looks like you effectively have one account, even though you have multiple accounts behind the scenes. So they're really doing a lot to break down those barriers. And also, obviously, they're very aggressive on cost and on platform. And I haven't heard any of those things coming out of Vanguard. I don't see Vanguard reps at any of the industry options events that I attend on a regular basis out there. I do see Fidelity people, but I don't see Vanguard. So that is probably another sign that this perhaps is not their focus. And from everything I know about Vanguard and from their founder's perspective, they don't want you trading a lot. They want you very much in the Buffett buy and hold category and not slinging things a day in and day out. So that would also lead me to concur that perhaps they are not the best for someone who listens to a program like this. So probably someone on the more active side of the fence, and certainly from an options perspective. Mr. Rock Lobster, I'd be curious your thoughts. I have never personally played around with the Vanguard platform, so again, I can't speak personally. Have you ever played around with it? Do any of your mentees or clients use it? And what are your thoughts on it as an options outlet?
I'm kind of in your canvas. I can't even I can't believe Vanguard really offers much of a platform at all. To be honest, just because, like you said, I mean, they just say buy one of our index funds and then go away, and we'll talk to you in 10 years, which is perfectly fine strategy for somebody. I don't see them being very option centric, but it might be more geared toward what they do. I know none of our clients have ever mentioned it at all. So if that helps.
Yeah, none of our listeners have ever really asked us. This is the first time I think we've ever been asked about it. So I think I'll put all that in the blender together, and you get a broker that probably isn't super options friendly. I was ironically, someone did mention Vanguard to me in a conversation recently, not that long ago, and they were touting the kind of the unfriendly nature of adding in new accounts and getting approvals. It is actually a good thing. They thought it was good that they had to go fill out paper documents and mail them back. They thought that was a good account security feature. I kind of laughed at them and said, that's just antiquated. So I guess if you like that, if you like the old school, get a piece of paper and mail it in kind of thing, and you think that's a good step for account security, then maybe Vanguard is the broker for you. But other than that, I think people listen to a show like this a little bit more on the cutting edge of the spectrum, and they're probably going to lean more towards the IBs or the OXs or the TOSs or some of the others out there that cater more to our space. Good question, Mr. Who was that? That was Aldo 2. You get points for a question no one's asked us before. So there you go. We always like those. In the meantime, though, we're going to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we break down what is up for the rest of the week, what we're keeping our eyes on. Not as much on the calendar this week, Mr. Rock Lobster. Last week we had the Fed. We had some obvious things on the horizon to look forward to. The Fed is now in the rear view mirror. We're coming in toward this quiet period, about a week from the Christmas holiday itself. So not a lot to really expect. I think Uncle Mike was joking earlier in the show that if you had the cure for cancer, you probably wouldn't announce it this week. So we're not really expecting a heck of a lot. That said, if there is anything compelling or worthy of note on your radar this week, sir, let us know.
Is Mike still here?
I will take from your... No, I'm talking to you. I'm taking from your silence that there's not much.
I could have sworn you said Tucson, and oh my gosh, my whole brain just melted literally right out my nose. I don't know what the heck happened. So is there anything happening this week? We're thinking no. The only thing that's happening this week is the market is going nowhere. And as I say that, as the words are coming out of my mouth, probably something totally off the curve is going to happen. I just looks kind of Christmassy. Weird things can always happen, but it does not feel like there's anything strange happening. So we're just looking at this we're just finding stuff to do, and there is some opportunities. I think they're starting to mark all the holiday volatility down. So some time spreads. There's some interesting stuff to do there. Just because the vol gets so ridiculously cheap, it can't go down anymore. And the market has very little to do to make money on some of these trades. So I would not call it a long-term Tucson type trade. It would be more like a 1-2 day time spread type trade. But stuff like that is looking like the most interesting. But you see some tech like NVIDIA or $100 and Microsoft $63, and just people are buying some stocks because there's some growth in these big technology companies again. So I still like them as a group. I'm kind of overweighted in that at this point. So we'll see what happens. But it's kind of my same mantra, and I'm not changing.
All right, and with that, that's going to end our Around the Block segment. It's also going to bring to an end this interesting polar vortex, or perhaps polar vortex dodging edition of the option block. Before we go, I'm going to check back in with my cohorts, my partners in crime. Uncle Mike called away, sadly, at the last minute, so I'll do his plug for him. Check out his book, Going Long, over there on Amazon. His last name, Tosaw, T-O-S-A-W. Costs you about pretty much a cup of coffee. So if you want to spare yourself a cup of coffee and instead get yourself some good reading for the holidays, the family's coming over and you just don't want to be stuck in the same room with them, head on over to the next room and sit on down with Uncle Mike's weighty tome, perhaps a nice cup of hot cocoa and a roaring fire. I think you'll be a happy camper. Of course, if you too want a financial advisor who's in that level 3 option specialist category, hit him up, mtusaw at rcmfs.com, and tell him we sent you. He'll be happy to take your email or indeed your call. And Mr. Rock Lobster, I know we're coming into the quiet period of the year, but what, if anything, is on the radar over there in the land of the pit?
We are Vol Class Search January 17th. For all those that are interested in actually learning how Vol trades, how the volatility products trade, how the VIX trades, actually generating a trade from start to finish methodology for volatility, where you can understand where break evens, how much money you can make, what the flow of the futures are doing. Actually, instead of just doing dopey stuff and just buying calls in the VIX all the time, think the vol is going to go up, you will see that's a fool's errand. You can be right every once in a while, but for the most part, you will get smoked. So learn how the products work, and save yourself a bunch of money. What can I say? We trade a lot of volatility option pit. We have a fund based on it. It's doing pretty well. So you can either learn how to do it, or you can spend lots of money trying to make a bunch of mistakes that we already did like 15 or 20 years ago. So, save some money that way.
So wait a minute, just to get this correct. So I shouldn't be going out and buying weekly 20% out of the money calls and VIX every week. I should not be. Oh, I may have misheard that. I have to go make some trades. Excuse me.
Yes, exactly. Go out and just buy those 20 because twice a year, 2 weeks a year.
Hey, all you need is a nice Rocktober. Your October, and you're good to go. The rest of the year, you can just let it erode. Give back to the market because it's been so good to you.
Exactly. Give the market lots of juice because it's good to you.
All right. And on that note, we will say goodbye to the Rock Lobster and Uncle Mike, and indeed myself. I want to thank all of you out there for downloading, streaming, and subscribing. Don't worry, live stream's coming back next week if you're missing it. And we'll see you on Thursday for more The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.